So I lost money on this stock. I took this trade on 19th of March 2025. So this is an old chart. I cannot show you data of April, May, and June as per the SEBI regulations, but I can definitely discuss with you a stock that I bought over 3 months ago. And I would not call it a mistake, I would call it a blunder. Okay, I really was not concentrating when I bought this stock on 19th of March. And as you know, I love to talk about my mistakes because you learn so much from your mistakes. The mistake here was not in terms of understanding risk. I understand risk very well. The mistake was in terms of position size. I took the wrong position size here. Okay, when you know that you are taking risk, you should ideally go with a smaller position size or go with a tighter stop loss. And I did neither on this trade. That was my mistake. So position sizing is a mistake. Okay. But let's not get too far ahead. Let us discuss this stock. First, the criteria. Let's look at the criteria, the analysis that I did. Why did I come to this stock? Things like that. And then we will discuss my mistake. So the price is above the blue, green, red. That is fine. One risk factor that you can immediately notice on this basis, the blue line is sloping down. Ideally, all the three moving averages should be sloping up. That's number one, that's the first factor that contributes to risk. The second factor that contributes to risk is after point 2 in the base, there is no green zone closing. There is not a single candle which has closed inside the green zone after point 2 in the base. Forget about closing. Not a single candle has even entered the green zone. So if I draw the base for you, this is point 1, that's point 2, point 3, point 4, point 5, point 6, and point 7. This is what I saw. Okay, so 7 points in the base, your mind gets excited, you're ready to take the trade. Okay, but you fail to realize that there is not a single green zone closing. Okay, so that is another factor which contributes to risk. The third factor that contributes to risk is the volatility inside the base. Look at these large candles here. That's volatility. Look at the falling window here. That's volatility. Look at the number of consecutive red candles inside the base. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 consecutive red candles inside the base. That is not a good sign, correct? Plus, you look at the depth of the base. From here till here, this is beyond D grade. If the depth is up to 10%, that is A grade base. If it's 10 to 20%, it is B grade. If 20 to 30, it is C grade. 30 to 40, it is D grade. This is beyond D grade. So how many things are contributing to risk? No green zone closing contributes to risk. The slope of the blue line is down. That contributes to risk. Volatility, large candles inside the base contribute to risk. 12 consecutive red candles inside the base contribute to risk. The depth of the base is beyond a D grade, worse than a D grade base. That again contributes to risk. So if so many risk factors are there, what should I do as a professional trader? First of all, I should not take the trade. And even if I take the trade, I should either go in with a small position size, or if I'm going with a normal position size, I should keep a tighter stop loss. Correct? That should be my approach as a professional. So I have helped you identify the risk factors inside this base. If you simply make a note of these risk factors on a piece of paper, it will help you identify high quality bases in the future. But again, let's not get far ahead. Let's go back to the criteria. What did I see that prompted me to get into this? So I had taken a screenshot at that time when I bought the stock. So this is what I saw. I saw the relative strength line improving. I saw the relative strength line from this level to this level, but I failed to see the relative strength line from this level to this level. So from here to here, it's a drop in the relative strength. But from here to here, it's a rise in the relative strength. I realized that I should have looked at the relative strength from here, not from here. Okay, because that is where the base began. Okay, very important learning for you. Look at the fundamentals. Sorry, let me open the notes that I had made. Yeah, see, these are the notes. At that time, the market was in a confirmed uptrend. The industry strength was declining, but it was a market leader. In terms of market capitalization, this stock comes in at rank number 2 in terms of market capitalization. Okay, so it's a market leader. There was no margin improvement. Margin was not at an all-time high. This is not important. The important thing is this: liquidity was good. It's not a penny stock. It has got good volume. Comparatives are good. So the good relative strength, see here, good relative strength 89, good buyer demand, institutional demand B plus. Group rank is less than 100. Okay, that's a less than 100 but more than 40. That's a problem. And the group rank is declining. That's again a problem, but it's a market leader. So 3 out of 5 criteria in comparatives are in our favor. So 2 are a problem. The industry group rank, it's more than 40 and it is worsening. That is not good. That is again contributing to the risk apart from the technical risk factors that I discussed. So industry group rank is a problem combined with technicals, combined with relative strength line decline. See, so many risk factors I have listed down for you in a short speech of like 5 to 10 minutes. Okay. Considering all these risk factors, I should not have taken the trade in the first place. But as a trader, as a professional, you tend to lose concentration. You see 7 points in the base and your mind gets excited and you put 6.25% position size in the stock. So in this stock, I took a 6.25% position size. Big mistake. Big mistake. Don't do that. Okay. Next. Liquidity is fine. Comparative is okay. Technicals was okay. I mentioned here okay because technically there are 7 points in the base. So it's still fine. Okay. Fundamentals not okay. Have a look at the fundamentals. This is not 40%. There is a decline from the second last quarter to the latest quarter in the sales growth. Okay, our EPS growth is not 25%. There is a decline in annual EPS from 2022 to 2023. Margin improvement is not there. Margin is not at an all-time high. Things like that. Even annual EPS is not at an all-time high. So there are so many things in fundamentals which are not in our favor. So fundamentally, it's not okay. Market conditions was confirmed uptrend, so that's fine. See, I have written notes here. Bought 6.25% and sold all the next day. The next day, I realized after I bought the stock that I have made a mistake because on the day of the breakout, I got good volume. See, if you look at the breakout day, see, I got good volume on that day, twice the average daily volume. Again, on the day of the breakout, I failed to notice that the upper shadow length, some people call it upper wick, lower wick, but I call it upper shadow, lower shadow. This stick that you see, that's the upper shadow. The length of the upper shadow is almost the length of the real body of that candle. Real body means that rectangle. That is again contributing to risk. So although there is high volume, there was still some supply coming in on that day, and the stock fails to close inside the green zone. That is another problem. So how many risk factors can I tell you regarding this stock? Okay, which I knew at the time. It was not that I did not know these risk factors. In spite of the fact that there are so many risk factors here, your mind still deceives you into taking the trade. So trading is not a physical skills. Trading is a mental and a psychological skill, right? So you have to take control over your mind. if you want to become a professional stock trader. So this is a complete blunder. Even the volume inside the base should be low. In this case, the volume, look at the volume. Most of the time during the base, the volume is above the blue line. That is another thing that I overlooked. So let me summarize all the risk factors in this trade because of which I should not have taken the trade, but I committed that blunder. Okay, don't do this. So risk factor number one, no green zone closing. Risk factor number two, the slope of the blue line, the 50-day is down. Risk factor number three, on the breakout day, I forgot to look at the upper shadow length compared to the length of the real body. Risk factor number four, the depth is too much, it's beyond 40%. Okay. Risk factor number five, there is volatility inside the base. Risk factor number six, 12 consecutive red candles inside the base, not a good sign at all. Risk factor number seven, decline in the relative strength from the start of the base till the end. Overall, there is a decline in the relative strength. Risk factor number eight, weak fundamentals. Risk factor number nine, industry group rank is a problem. It's more than 40 and worsening. So, nine risk factors I have told you which contribute to the overall risk in this particular trade. So, I should have ideally taken a test position. Ideally, I should not have bought the stock. But even if I had bought the stock, I should have taken a test position, just like I did with yesterday's video. I discussed Navin Fluorine. Actually, this was a stock that I bought before Navin Fluorine and that is how I realized that because of this stock, I realized that I should take a test position in Navin Fluorine. Okay. So you learn from the experience of the stock. So if I had not bought this stock, I would not have been able to handle the Navin Fluorine position properly. In Navin Fluorine, it was a no loss, no profit trade. This was a proper loss making trade. My loss on this would have been, say, 0.25% of my overall portfolio, because if you notice, I sold all the next day. See, it started to come down the next day. So when the low of this candle broke, when it touched the low of this candle, ideally that should not happen, right? After the breakout, the stock should continue to go up. When the low of this candle broke, I started to reduce my position size. I never allow my stock to reach 8% stop loss. Okay, so from here till here, this is like 2%. So at 2% from my buy point, if I started to reduce my position size, so let's say I closed everything by 4% below my buy point. So 6.25% multiplied by 4%, that's 0.25% of my overall portfolio that I lost on this stock. Not a big deal, not a big amount, but 0.25% on a portfolio level. I should not have lost that, given the fact that there are 9 risk factors which I knew that they were there. It's not that I did not know. I knew they were there. And still I took a larger than the position size that I should have taken on this stock. So in every video that I make, you will only hear me talking about risk, because that is the only thing that is in your control. Nothing else is in your control. You don't have control over the price. What did this trade teach me? This trade taught me that even if a stock is a market leader, you have to wait for a green zone closing. This is very important, right? In Navin Fluorine, if you see, it was not a market leader, but it had green zone closing. This stock, if you see, it is a market leader, but it doesn't have green zone closing. Okay. So you realize when you are taking positions in the market, you have to conclude something from that stock experience. So I realized by buying Navin Fluorine and Vijaya Diagnostics that I am trading in a market condition which is not favorable for stocks, which is not providing us green zone closing. I am also trading in market conditions which are not favorable for stocks which are not market leaders. That is what Navin Fluorine taught me. So when you take these 2 points into account, you only end up buying only those stocks which are market leaders, which are in top 3 or 5 in terms of market capitalization. And you only end up buying those market leaders which are showing at least some 3 or 5 candles closing in the green zone. So that increases your odds of success, right? So you have to take the trade, preferably test positions, draw a reasonable amount of conclusions regarding market conditions from the experience of that trade, and then accordingly adapt your strategy based on what you have learned in those market conditions. However, imagine if this stock had gone up 20% from my buy point. What does that tell me about the market? It tells me that this market is lenient. It tells me that this market is forgiving. In this kind of market, I can allow myself, I can give myself permission to buy stocks which don't show green zone closing. I can give myself permission to buy stocks where the base itself is a C grade base or a D grade base. I can give myself permission to buy stocks where the relative strength line does not show a blue dot or it is actually declining. So if this stock would have gone up, I would have bought many more stocks like this. But since this stock gave me a loss, I decided to avoid stocks which do not provide me green zone closing. And after Navin Puran, I decided to avoid stocks which are not market leaders. So this is how you learn, by testing the market, by probing the market, by taking test positions, by learning from your experience, by learning from your losses, by taking reasonable conclusions from the experience that you have in the market. I have shown you so many stocks where there was no green zone, not a single green zone closing, and the stock shoots up 40% in 2 days. Okay, remember Tata Investment? That was in 2023. You remember IRFC? That was in 2023, November, December. You remember GRSC? That was in 2024. The stock shot up 100% without a single candle closing inside the green zone before the breakout. So that's the point which I wanted to discuss. I hope this video has been helpful to you. Thank you so much.